Welcome everyone to what should be an informative Tico Tips session on the topic of trust reconciliations. Here is a brief overview of trust accounting and specifically trust reconciliations. All registrants are required to maintain a trust account pursuant to Section 27 of the Ontario Regulation made under the Travel Industry Act. The primary objective of trust accounting is the protection of customer funds received for the purposes of providing travel services to the customer. To achieve this objective, customer funds must be deposited directly to the trust account, and the trust account must be reconciled regularly, and at a minimum when surplus is transferred to the general account. The purpose of a trust reconciliation is to determine the amount of trust surplus available for transfer to the general account once the supplier has been paid in full and or the travel services have been provided in full. Here are some key definitions and concepts when it comes to the topic of trust reconciliations. First of all, a trust reconciliation refers to a calculation that compares the trust customer deposits liability balance against the trust asset balance to determine the net trust surplus or deficit position. Trust customer deposits liability refers to total receipts from customers for travel services that have not yet been passed on to suppliers and the service has not been fully provided, meaning that the customer has not yet returned from their travel. For a given customer, if there is a balance reflected as trust prepaid travel, then the amount reflected as trust customer deposits liability should be the gross amount of funds received. Trust asset refers to the sum of the reconciled trust account bank balance plus the trust prepaid travel balance. Trust prepaid travel refers to total prepayments made to suppliers for travel to be provided at a future date, for which there is a corresponding customer balance included in the trust customer deposits liability balance. Recording the trust prepaid travel balance is not a requirement. Instead, it's an optional accounting method typically used by tour operators. Here are some key additional terms and concepts with respect to trust reconciliations. A trust deficit refers to the shortfall of trust assets when compared to the trust customer deposits liability balance. There should never be a trust deficit, and it is considered a breach of Section 27 of the regulation. Let's take a look at this sample trust reconciliation for a fictional registrant. In this case, we have a customer deposits liability balance of $10,000 as at September 30th, 2016. We then compare that obligation to our total trust asset of $5,000. As you can see, our total trust asset is comprised strictly of our reconciled trust account bank balance of $5,000 because we have nil prepaid travel in this example. When we compare our trust asset of $5,000 to our total customer deposit liability balance of $10,000, we determine that we have a trust deficit of $5,000. As noted earlier, a trust deficit should never happen, and it's considered a breach of Section 27 of the regulation. Trust surplus refers to the excess of trust assets over trust customer deposits liability that may be transferred to the general account. Here's another sample trust reconciliation for us to take a look at. In this case, our registrant has a customer deposits liability balance of $5,000 as at September 30th, 2016. When we compare that to our total trust asset balance of $7,000, we note that there is a trust surplus of $2,000. This trust surplus represents the maximum funds available that can be transferred from the trust account to the general account. Audit trail refers to the existence of sufficient records such that a specific customer booking can be traced from the initial receipt of customer funds to the supplier payment and/or provision of travel services. Trust reconciliations must be prepared on a regular basis, typically at the end of each month, and at least as often as funds are transferred from the trust account to the general account. The purpose of these reconciliations is to monitor the trust position so as to ensure that the trust account is never in a deficit. It also computes the trust surplus, if any, that could potentially be transferred to the general account. Typically, a trust reconciliation has 4 key components. The first of these components is the customer deposits liability balance. This represents total receipts from customers for travel services that have not yet been passed on to suppliers and the service has not been fully provided, meaning that the customer has not yet returned from their travel. Any balance reflected as a customer deposits liability must be supported by a listing of what makes up this balance by customer name, invoice number, and deposit date. The second key component is the trust account bank balance. This represents the reconciled trust account bank balance as at the date that the trust reconciliation is being prepared. The third key component is the trust prepaid travel balance, which represents prepayments made to travel suppliers for future travel only for those customer bookings included in the customer deposits liability balance. Any balance reflected as prepaid travel must be supported by a listing of what makes up this balance by supplier name, invoice number, and payment date. The prepaid travel balance must never exceed the customer deposits liability balance for a specific customer booking. The fourth and final component of a trust reconciliation is the trust surplus or deficit. This represents the final result of the trust reconciliation, and it is computed using a formula. Trust surplus or deficit can be computed as follows: trust account bank balance plus trust prepaid travel less trust customer deposits liability. Let's take a look at an example to get a better understanding for the process of preparing trust reconciliations. In this scenario, let's take a look at an example of a new business with its first and only transaction. ABC Travel sells a tour package to a customer on September 14, 2016 for $5,000 and receives full cash payment from the customer on this date. The tour departs on October 5, 2016 and returns on October 19, 2016. ABC Travel paid a deposit of $2,000 to the travel supplier on September 28, 2016, and the balance owing of $3,000 was paid to the travel supplier on October 5, 2016. Prepare the trust reconciliation as at September 30, 2016, assuming ABC Travel had no other past transactions. Based on this example, we can see that as at September 30, 2016, we had received $5,000 of customer funds for future travel, for which the related travel supplier had not yet been paid in full. Thus, this $5,000 represents our customer deposits liability balance as at September 30, 2016. Since we had made a partial prepayment of $2,000 to the related travel supplier as at September 30, 2016, this $2,000 prepayment represents our prepaid travel balance. The balance sitting in the trust bank account as at September 30, 2016 is $3,000. This represents the $5,000 customer receipts less the $2,000 partial supplier prepayment. The net trust surplus is nil as at September 30, 2016, because the customer deposits liability balance of $5,000 is fully offset by the trust bank balance of $3,000 and the prepaid travel balance of $2,000. This means that there are no funds available to be transferred from the trust account to the general account. It should be noted in this example that we have shown the prepayments made to suppliers as a separate line item titled Trust Prepaid Travel. Please note that it is not a requirement to segregate the prepaid travel from the customer deposits liability balance. It is possible to net these balances. In this example, it's the same situation. However, in this case, instead of showing the $2,000 supplier prepayment as a separate line under Trust Prepaid Travel, it has been netted against the customer deposits liability. This is how we have a $3,000 liability balance. The same result is what happens at the end with a nil trust surplus. Let's take a look at a second example that is entirely separate from our first example. In this scenario, XYZ Travel sells an air ticket to a customer on September 14th, 2016 for $2,500 and receives full cash payment from the customer on this date. The air ticket is for a flight that departs on November 10th, 2016 and returns on November 24th, 2016. XYZ Travel paid its wholesaler by charging the full cost of the air ticket of $2,400 on its corporate credit card on September 15th, 2016. XYZ Travel reimbursed its corporate credit card from its trust account for the amount of $2,400 on November 5th, 2016. Prepare the trust reconciliation as at September 30th, 2016, assuming XYZ Travel had no other past transactions. So in this case, as at September 30th, 2016, we had received $2,500 of customer funds for future travel for which the related travel supplier had not yet been paid in full. It is important to note that even though we may have put the travel supplier's charge for $2,400 on the corporate credit card before September 30th, 2016, the travel supplier is only considered to be paid once this charge of $2,400 on the corporate credit card is fully reimbursed from the trust account. This does not happen until November 5th, 2016. Thus, the customer deposits liability balance as at September 30th, 2016 is $2,500. The balance sitting in the trust bank account as at September 30th, 2016 is $2,500. This represents the $2,500 customer receipts that had not yet been passed on to the related travel supplier as at September 30th, 2016. The net trust surplus is nil as at September 30th, 2016 because the customer deposits liability balance of $2,500 is fully offset by the trust bank balance of $2,500. Again, this means that there are nil funds available to be transferred from the trust account to the general account. Let's build on our previous example and consider a second transaction. XYZ Travel sells a vacation package to a customer on October 4th, 2016 for $3,000 and receives full cash payment from the customer on this date. The vacation package departs November 14th, 2016 and returns November 21st, 2016. XYZ Travel paid its wholesaler by charging the full cost of the vacation package of $2,500 on its corporate credit card on October 5th, 2016. XYZ Travel reimbursed its corporate credit card from its trust account for the amount of $2,500 on November 5th, 2016. Prepare the trust reconciliation as at October 31st, 2016 and November 30th, 2016. As we can see in this scenario, as at October 31st, 2016, we had received $3,000 of customer funds for future travel for which the related travel supplier had not yet been paid in full. $2,500 was charged on the corporate credit card, but it was only reimbursed from the trust account on November 5th, 2016. We also had an opening balance of customer deposits liability of $2,500 from our previous example that must be rolled forward until it is extinguished. A customer deposit's liability balance is considered extinguished at the earlier of two dates, that is, when the trip is completed or when the related travel supplier is paid in full. Thus, the customer deposit's liability balance as at October 31st, 2016 is $5,500. This represents a cumulative balance because it considers any customer deposits from prior periods that have not yet been extinguished. The balance sitting in the trust bank account as at October 31st, 2016 is $5,500. This represents the total customer funds received that have not yet been passed on to the related travel suppliers as at October 31st, 2016. The net trust surplus is nil as at October 31st, 2016. This is because the trust bank balance is fully offset by the customer deposit liability balance of $5,500 and no surplus is available to be transferred at this time. As at November 30th, 2016, the customer deposit's liability balance is nil because both trips have been completed and or the related travel suppliers have been paid in full. The balance sitting in the trust bank account as at November 30th, 2016 is $600. This represents the $100 surplus derived from the air tickets sold and the $500 surplus derived from the vacation package sold once all related travel suppliers were paid in full. This means that the $600 surplus that was calculated represents the maximum amount of funds that can be transferred from the trust account to the general account, which in our example happens to be the full amount of the trust account bank balance. Let's take a look at some frequently asked questions. Question number 1. Should only customer funds received in the current month be included in the trust customer deposits liability balance? The trust customer deposits liability balance on a trust reconciliation should be a perpetual and cumulative balance. Thus, if customer funds were received in a prior month for which the trip has not been completed and the related supplier has not yet been paid in full, then this amount would be included as part of the trust customer deposits liability balance. Question number 2. Are there any exemptions to trust accounting and preparing trust reconciliations? Section 28 of the regulation allows registrants to provide security in lieu of trust accounting. The security provided must be equal to or greater than 1/6 of cash sales and takes the form of a letter of credit or bank draft. Cash sales is defined as money that the registrant has actually received from its customers and would otherwise have to be deposited to its trust account. Question number 3. What supporting documents should accompany a trust reconciliation? A trust reconciliation should be supported by the following: a trust account bank statement or statements, a listing of trust customer deposits liability by invoice number, customer name, and date of deposit, if applicable, a listing of trust prepaid travel by invoice number, supplier name, and date of supplier payment, if applicable. In summary of this session, here are some top Tico tips to increase compliance. A trust reconciliation should be prepared regularly and at least as often as funds are transferred from the trust account to the general account. Ensure that the trust customer deposits liability balance is determined on a perpetual and cumulative basis. The trust prepaid travel balance must never exceed the trust customer deposits liability balance. If applicable, the trust customer deposits liability balance should include any customer funds received for unredeemed gift certificates and any unsettled BSP payable balances. For more information, please visit our website. Thank you for joining this Tico Tips session on the topic of trust reconciliations.